Okay? Kaya hindi pa din tayo makasunod sa global equity markets. Okay? Philippines, Malaysia, Indonesia, alright? Thailand, yan yung grupo, yan yung mga, kumbaga, nagchichismisan sa labas, yung mga marites, yan yun. Sila yung apat na yan. Okay. Now, going to the bond market naman, okay, sinasabi ko ba na pangit ang bonds? Okay? Right now, investors are risk takers. They're now risk on. Okay. Does it tell us pangit ang bonds? Not necessarily. While safer bonds are negative, as you see, the 25-year treasury bonds of the US, down siya. Siya yung pinakamalakas ng binagsak. Pero there is this particular bond asset that we call HY or high yield that's increasing naman ang trend. Because high yield bonds, okay, are riskier bonds. Normally, they are the corporate bonds. So para siyang stocks din, pero in a form of a bond. Kasi nga, ang nag-issue ng bond ay company. And companies are tied up with the global economic recovery. So in such economic condition, sa bond market, ang malakas yung riskier bonds. And that's mainly the high yield bonds. And that's actually, we are invested heavily sa cash flow fund. Okay? So that's already a telling na we got funds in Peru that are maximizing that opportunity. Second, global stocks. Okay, meron ba tayo niyan? Yes, we got the Global Market Navigator Fund, which is heavy on equities globally. So, given this picture, okay, our performers and non-performers in the stock market ay uneven. Yan yung sinasabing uneven recovery. Those with more vaccines, those with higher vaccination rate, and those with got the money to continue supporting their citizens are those who will recover faster, while the others will recover but will trail or susunod lang sila eventually. Slow growth, but nagkakaroon pa din ng recovery. That's where the uneven recovery happens. A proof is, okay, while US still the country with the most number of active cases, but remember, they got a big government money from the government supporting them. And they got the supplies of vaccine primarily. Pero 13 out of these 20, okay, countries ay galing sa tinatawag nating emerging markets o yung mga pasikat na mga ekonomiya or bansa. And that includes us, the Philippines. And with these numbers very high, tapos mababa ang vaccination rate, yun talaga yung center ng problem with our markets. Okay? Kaya, okay, those who are moving faster are now on the lead sa recovery. Like your US, okay, yung mga European countries, pero yung mga sumuhabol pa lang ngayon ay yung mga emerging markets like your India, Mexico, Philippines. Pero if you will notice, ba't ang taas ng growth rate? These are second quarter numbers, guys, by the way. Bakit ang taas? Yung mga US single digit lang. That's what we call base effect. Pag sobrang bagsak mo nung second quarter last year, malaki ang visualization niyan, parang ang laki ng grino niya kasi nanggaling siya sa mababa. We call that the base effect. All right? But again, the stronger ones are the darker greens. Okay? The starting to recover are those lighter blues, okay, or yung dark blue. Okay, my point here is in recovery, again, equities perform very well. So how can you position this kind of information to clients? Okay. Young people, I'll bank on what Wilkins mentioned earlier. Young people should actually start to plan their retirement today, not when they hit 50s, not when you hit 60s. Yun kasi yung common belief. You start planning your retirement when you're at that age. No, you start retirement when you're young. And right now, this positions young people to bank, okay, to start growing their money ready for retirement. But later you will realize you should not be forever in stocks. Okay? Because we have a cycle to follow. But in recovery, equities do well. Okay? And compared with the globe, Philippine financial markets, both bonds and stocks, are not doing well. Imagine nyo yon. Kung investor ka sa Philippine bond market at Philippine stock market, pareho pang at a loss. These are the year-to-date numbers telling you that when you're invested in stocks year-to-date, nalugi ka na about 5%. Pag nasa bonds ka naman, nalugi ka ba ng about 2%. So saan na? Okay, yan yung problem natin uniquely in the Philippines. Kasi nga, with the high inflation, okay, that's beating bonds, and also the slow economic growth na pinalala pa siya ng mga lockdowns, that's dragging stock market to move up. Okay? But the others, yung ibang bansa sa labas natin, they're already moving up. So that's our problems are very country specific. Okay? But again, you know this drill. When the markets are down, this is the best time, di ba, to accumulate the opportunities for the long term. Okay? We are telling information about stock market movements, bond market movements, not because our clients should be guided in the short term. You should be guiding them in the long run. And right now, the stock market of the Philippines are actually closely hitting, the 7,000 index points. So, di ba parang it's kind of unique na bakit tumataas, ang dami nating concerns lalo sa COVID-19. For one, in simple language, yung investors sawa na or sanay na sa ini-ECQ, sanay na siya sa ganung balita. But the problem of our economy is really about the concentration of economic growth in key places lang like NCR and yung surrounding areas na yan din yung nila-lockdown natin. Did you know that the Luzon and NCR, they comprise about 70% of the economy. So when you lock it down, you're technically slowing down growth from the entire country na. Yun yung main problem natin actually. We're very much concentrated on key places. Hindi siya nakaspread. Okay? But another good news naman, on the other hand, that's fueling stock markets are actually the fact that companies now are learning to cope from the pandemic and the pandemic demand. And okay, we also in general got looser restrictions. Kapag nag-ECQ na tayo this year, it's not like the ghost town of last year. We are now experiencing traffic, kahit ECQ, kasi moving na tayo. Okay? Kasi may vaccination na din. And it's clearly, across all sectors, there are light, okay, at the end of the tunnel for them. Okay? Telco, they're really the big winners along with the broadband providers. But yung banking, they're starting to recover, but mainly they're recovering from the lower provisions for losses at yung mga non-interest fee income, yung mga china-charge sa atin when we transact. So doon sila bumabawi kasi banks have to balance the risk of accepting loans kasi nga with a weak economy, chances are borrowers have less credit score, kumbaga mahina ang credit standing nila. Okay? Property, okay, it's not bad at all because yung mga property that are residential in nature and also those being rented by the BPO sector, that's supporting the property sector at large. Pero again, the malls, the offices, the entertainment places, hotels, they're all still down because of the restrictions. Consumer companies are somehow recovering, but they're battling it on the cost side. Diba? With high inflation, raw materials tend to be more expensive, making their profit margins actually mas maliit. baga yung kikitain nila, kahit malakas na yung demand ng konti, nano-offset ng mataas na cost of goods. Cement, okay, industry and at large, construction, they're doing well because we're continue to do such activities even in ECQ, and even power has surged back to do normal, okay, demand versus 2020. So that's what's keeping a good outlook for the markets, lalo na ngayong Q4, okay, na spending season for us. And a proof of that first half earnings ay yung growth natin in the first, since the pandemic started, that we recorded 11.8% quarterly growth in the second quarter. Is it the time to really cheer? Okay, not exactly, because allow me to share with you how we will digest that 11.8. Mukha siyang masaya kasi nga nanggaling tayo. Remember that growth is compared with the growth back in second quarter of 2020, the peak of the pandemic panic, where we all close borders very strict. Okay, so coming off from that weak point, umangat na tayo ng second quarter this year, and that's about 11.8%. Now, are we back to the pre-pandemic? No. Okay, why? In this perspective kasi, okay, before the pandemic started, the value of our economy is 19.38 trillion. In fact, that's the highest since 2010 in this chart. And when the pandemic struck us, the value of the economy shrunk to 17.53. So that's about 10% decline. Ngayong 2021, first half of the year, where we accelerated vaccination, the value of the economy is 8.89 trillion. What's the deal? Okay? Para masabi natin na we are actually recovering, we have to beat at the least yung pandemic level. So we still have about 49% to work on. Kasi yung 8.89 trillion is 50.7% ng size ng pandemic time. So dapat, if we are to say we are to recover, we have to beat 17.53 trillion at the least. 8.89 na tayo sa first 6 months of the year. So we have to work on the last 6 months of the year and beat at the least 17.50 para masabi natin the economy was better off than the pandemic. Kasi pag mahina pa yan sa 17.50 trillion, may problema na nangyari. Okay? And the long-term view is we go back to 19.38 trillion during the pre-pandemic. Okay? Was it all clear for everybody at this point? Okay. Ngayon, we are now with the group na nagre-recover along with Indonesia, Vietnam, and Singapore. Okay? Now, the threat really is now is the high inflation. We thought that the 4.7% inflation rate back in February was the highest for the year because in fact, after nag-hit ng 4.7 tayo noong February, we've been hitting slower inflation rate until July. But it was a surprise. Back in August, we recorded a 4.9% inflation for the month, all right? And that's topping pa the February highest for the year. In fact, the 4.9 inflation rate was the highest since January 2019. Okay? And that's because of the higher prices in food, alcohol, clothing, health, restaurants, and malaking factor din dyan yung transportation. So what's the impact? Okay? The impact is you have to work harder for investment growth because you have to beat the 4.9% inflation rate para masabi mo kumita ka. Okay? And at the same time, high inflation also affect bond performance. Okay? Unemployment rate, a better news is our unemployment rate in July is at 6.9%. Okay? And that's the lowest we have recorded, I mean, since the pandemic started. back in April 2020, the highest that we recorded was 17.6% unemployment. And it gradually went down to single digit, and the lowest was back in July. We expect August unemployment rate to probably a little higher than 6.9% because we've, again, ECQ'd Metro Manila and NCR during the month. But this is already a convincing information that namamanage natin yung loss of jobs, but that's still 3.1 Filipinos unemployed. Okay? Another reason, okay, to somehow have a caution ay yung ating manufacturing index. Okay, why am I sharing this? Okay? Because manufacturing activity is an indicator of economic growth. How? Diba? Pag gumagalaw o umiinit yung manufacturing, it means there is demand. There is production kasi. Now, to measure it, if the points, okay, what we call purchasing manager's index point is 50 points and above, that tells us it's expansion. But if it's lower than 50, that means it's contraction. For the first 3 months of the year, and in June and July, we actually recorded expansion. But in August, again, during the ECQ, it fell to 46.4 points, the lowest, okay, during the year, na sinasabing bumalik tayo sa contraction. And that's the risk for the short term. But again, if you look at for the whole year, that's 5 months versus 3 months of contraction. Okay? And the better news, okay, na gumaganda na yung global growth, it's our Filipinos working abroad are now able to send higher value, okay, higher amount of remittances back to us. The much needed boost for our economy is the recovering remittances. Ano ba sinasabi ng growth in remittances? Ibig sabihin, may trabaho pa din ang Filipinos abroad. Second, okay, that's already consumption when it sends back to us. Kaya nga, if you notice, diba, we position again yung OFWs in our marketing. Kasi nga, ito yung signs niya. Okay? And as we conclude, again, 2021 so far is giving us the strong indications of recovery compared sa worst noong 2020. So again, in all fronts, unemployment, okay, economy, and even trade, okay, it's going back to growth. It's going back to recovery. But again, I'm saying na when we tell our clients to insure and invest, okay, what do they have to consider? They have to consider what are the things to look forward to. Hindi yung what's happening today. Kasi when our clients get an insurance policy with us, we're not talking about today. We're talking about their future. So there are a lot of things to look forward to in the future. Again, the clear indication that recovery is here tells us it will be better than 2020. Second, we got a fiscal reform to the CREATE law. Yung CREATE law is making companies lessen expenses from taxes and funnel it to recovery and expansion efforts kasi nakakatipid po yung malaking binaba na income tax nila. And the very critical election. Lahat po ba kayo nagpa-register na? Kasi if you really want me to share good news by next year, it's important that you register and vote for the right person. Kasi malaking factor yun when we position our economy to really grow. The problem is no longer solely on the virus. It also rests on the management of the pandemic. Okay? Kasi naturally, the Philippines have what? It has what? Young people, good for employment. We got consumption, depending on the, we have the consumption as a strength of the economy. We got still everything with us, di ba? Problem is the management of resources and the management of pandemic. So yun yung key driver for the next term. Okay? But again, expect volatilities in the markets from the time that people or the politicians start to announce their candidacy. And it's very critical also who will be gunning for the presidency, all right, by next year, May 2022 elections. So make sure, okay, you vote for the right person, okay? But again, the story of recovery doesn't stop in 2021, but it will continue until 2022 as viewed by the IMF. Okay? In their latest World Economic Outlook, mapapansin nyo, from recession, 2021 is now recovery and it will continue. That's why medyo mas mahina yung growth rate kasi continuation siya until 2022. And it spreads in different regions. Okay? Lahat yan, cut across, but you see emerging markets staging a higher growth rate versus the developed ones, sila US, Europe, and Japan. Okay? And even the World Bank tells us that we're expecting the world economy to be at this fastest pace in 80 years. Okay? But in the Philippines, from the most optimistic economic outlook na 7.5%, okay, it's now down to 4.5% because of the lockdowns. Okay? Di ba nga tayo, ang bansa may pinakamahabang lockdowns. Sing haba nung pandemya. So yan yung struggle. Okay? But outlook-wise, globally, again, it's vaccination that will reopen the economies and expect US to be at the forefront of growth because sila yung may pera. Imagine, sila maglalabas ng about $3 trillion in dollars to support the pandemic. At sabi din sa study, dahil sa pandemic, Americans have saved a lot and now they're going back and going outside already and starting to normalize activities. They're expected to spend their excess savings. Imagine if that will translate to exports, one beneficiary is the Philippines. Okay? And inflation is part of recovery and high inflation is temporary. The critical factor here is dapat hindi magtaas ng interest rate ang Central Bank ng Amerika. Why? Okay? Increasing interest rates will affect stock market performance kasi ibig sabihin, pag nagtaas ang interest rates ang Amerika, ibig sabihin, they're lessening their monetary support. Okay? Nagle-lessen ng, yung plano nilang magbawas din ng bond buying to support the economy will slow down. But sabi nga ng fund manager, all right, the Central Bank of America is no hurry to raise interest rates before year 2023. But tomorrow, mag-meet sila Fed. So we have to look after that news, what will be the decision. Pero again, we need a low interest rate environment to sustain the recovery, even in the Philippines. Okay? Bukod sa pandemic, the risk that you have to look ay dahil nga sa sobrang parang financial planning, okay? Ang mga economies na naka-lockdown or hirap mag-reopen will have lesser chances of getting more tax revenues. And if we got a lot of spending because of the pandemic, but low yung cash inflow mo from income, that will lead governments to really incur high debt levels. Yan yung tinatawag nating mataas na debt to GDP ratio din. Mahina economy mo, mataas yung utang mo, problem yon financially. Okay? And also, yung mga geopolitics, yung may pandemya na, pinag-usapan pa rin yung gera, di ba? These are the other problems. But again, if our clients are into equities, okay, it's a good view. Okay, magandang outlook for equities. But if they're into bonds, okay, look after the high yielding and also those from the emerging markets and also high yield bonds sa Asia. They will discuss more of the fund focus later on. In the Philippines, okay, bond markets, will be supported. It will be driven by the low interest rate environment by the BSP. So we expect that the BSP will continue to support the economy with a low interest rate, which is good. All right. GDP expected to rebound. Again, nagkaroon tayo ng inflation risk because of the 4.9%. But we expect lower inflation rate in the coming months. Okay. And for the equities, again, the big news would be more and more Filipinos getting vaccinated. And yung mga government spending, like for the infrastructure, we expect that to boost the last quarter economic growth and also spending related to elections until 2022. Now, from all the stuff I've mentioned, what do we have the funds to capture those opportunities? Okay? Given that my main story is what? Okay? Medyo mahina ang Philippines, pero the outlook in the long term remains pretty strong. The global markets are moving already while the rest, like the Philippines, are not catching up as fast. And there is also what we call good things happening in bonds like the high yield. Okay? Given those points, we have three funds here that can capture those opportunities. Our equity index tracker fund, our cash flow fund, and also the global market navigator fund. How? Let's go first to the equity index tracker fund. Okay. Bakit? Bakit index tracker? Ang baba, sabi mo nga, ang baba na market, ang baba sa economy, not growing. But again, we're talking about long term. Okay. We position the index tracker as what? Okay. This is your all-star Philippine equity fund. Why all-star? The big guys of the Philippine stock market are here. Okay. Ito kasi yung best of the best. The fund invests in the stocks comprising the Philippine Stock Exchange Index or the PSEI. Okay, I'll share with you more of that later. But again, why invest in this kind of fund? If you got starters, okay, the young ones na wala pang experience din sa investment and they want to go into stocks, this is one good way to begin investing in the stock market. Kasi una, again, you're investing already in the best guys, the all-stars. And since we can technically say na parang ginagaya, kaya nga tracker, ginagaya natin yung laman ng index, hindi masyadong nag-exert ng cost or ng time to research yung fund manager kasi nga may copy-paste ka na. Kaya siya lower fees. Okay? And the names that you are investing in are the following. The 30 largest and most actively traded stocks in the market. Okay? And effective August 16, okay, pinalitan na si Emperador at si DMCI with AC Energy and Converge ICT Solution. So we're bringing in power and tech telco stocks in our index. Okay? And again, this is changed every 6 months. So sinusundan lang natin yan. PSE changes the index members every 6 months and the last review was August 16 and these are the changes. Okay? So napakadali lang hanapin ito. You don't need to ask me kung ano saan sa ka-invest to kasi kung ano naman ng PSEI, yan din yun. And if you will compare this with the equity fund, maybe you're asking that. Okay. Basically the equity fund and the equity index tracker fund are the same in terms of risk and in terms of investment objective. Ano ang kanilang pinagkaiba? Una, okay, ang fund manager ng equity fund, si eSpring. Ang fund manager ng index tracker, si ProLife UK Investments, yung trust company natin. Okay? The investment strategy of equity fund is active. Ano ibig sabihin ng active? In active management, the rule is kung merong stock na maganda ang potential, the fund manager can invest in it. Wala silang limitation. Kumbaga, the Philippine stock market has about more than 240 stocks. And that's the universe of the equity fund. Okay? Pwede siya mag-invest in any stock as long as they see potential. Okay? Si index tracker fund, limited lang siya dun sa 30. Okay? Dun sa 30 stocks na binanggit natin kanina. No more, no less. Okay? Kasi nga, copy-paste, kaya siya passive. Sinusundan lang niya. Okay? And the flexibility is where this lies. Kasi nga, sa equity fund, while actively managed siya, one stock is only up to 10% of the fund. The biggest stock right now is SM. Okay? Kasi SM, about 15 to 17% yan ng buong market. In equity fund, SM is just 10%. In the index tracker, it follows 15 to 17% siya. Nakuha nyo ba yung difference? Kasi nga, dahil copy-paste si index tracker, they will also copy how much it has in the weight of the index. Si equity fund, for diversification and lessening risk, you can invest in one stock only up to 10%. Question. Practical question, practical info. Si equity fund may Mondnisin. Si index tracker, wala. Kasi wala siya sa 30 stocks. Ganon yung difference niya. Okay? So, ibig sabihin, mas flexible si equity fund in terms of sino yung ipapasok niya. Pero ang limitation niya, 10% lang per stock. Si equity index tracker fund, ang flexibility niya, it can go beyond 10% as long as that's similar to the weight of the index within the 30 lang. Kaya mas mura ang charges ni equity index tracker fund at 1.75. Okay? I look forward. This is pretty clear for everybody kasi natatanong siya lagi. And by performance, the index tracker fund is now on its first year. So happy birthday to index tracker. And since inception, we grew the fund 8%. Okay, since last year, 1 year return niya halos na yon. Okay? And right now, given the market is down, it's an opportunity for you and our clients to buy it at a low price. Then we move on to the cash flow fund. Para sa naman to, okay? Para to sa mga moderate investors, and pati rin aggressive, pwede din. But their main objective ay magka-liquidity o magka-pera. Okay, bakit? Kasi cash flow fund, the fund's objective is to give, their aim is to offer or provide the cash payout equivalent to a maximum of 1% per quarter or 4% in a year. Non-guaranteed, but that's the aim. Okay? What's good with the cash flow fund? Bukod sa payout, okay, is also available in dollar and in peso for all our single pay clients. Okay, how do we position this? On top of the payout, the fund is very diversified and very responsive to market conditions. How? Okay, the cash flow fund is a safer or less aggressive way to get payout. Why? Because the fund is mainly invested in bonds, both in the West and in the East. Bonds from US and bonds from Asia. Okay, ano bang kagandahan ng US high yield? Di ba? Proof na nung performance kanina, US high yield bonds, they tend to perform well in slow to moderate economic growth, just like what's happening. Yung Asian bonds naman, their potential economic growth kasi nga emerging markets. So majority of the fund is invested in bonds. Okay? Kasi nga bakit? Kasi nagpe-pay out eh. Saan magbe-base ng payout? Sa coupon, yung binibigay ng bawat bond. And to boost the fund's performance, nag-i-invest din tayo sa stocks na nagbibigay ng income.
Ayan, naglalagwata si Sir Mark.
Yes, technical difficulty.
Dapat talagang favorite ko sa one of our guests si Sir Mark. Kasi parang alam mo yun, kahit mga investment yung pinag-uusapan natin, parang pag siya nag-explain, gets nating lahat.
So,
Ayan.
learning so far, guys.
Sobrang ganda daw kasi ng market. Napa-invest agad si Sir Mark.
Fund, the CFF is meron siyang pampaboost, kaya siya may equities din up to 20%. And kasi ganito, here's the deal breaker kasi when you find out saan siya naka-invest. Okay? Kasi I believe clients would be more comfortable seeing where the funds are invested in. Okay? Sabi natin may US high yield. Anong klase mga companies yon? One example would be Hudbay Minerals, which is one of the diversified mining companies. And saan natin sinasabi yung high yield? Diba may mga numero dito? When you read this, just to let you know, pare, Hudbay Minerals, 6.125%. Yan yung coupon niya. Yan yung binibigay ng bond na napupunta sa fund. Yan yung, kumbaga, kung nag-invest ka din mag-isa dyan, ang kinakukuha mo, for every peso or for every dollar you invest in Hudbay, you get 6.125%. So, di ba mataas yung yield? Kaya siya high yield bonds. Bakit mataas yung yield ng ganitong klaseng bonds? Kasi corporate, and corporate bonds are riskier than government bonds na high grade. Okay? And it's diversified because look, yung top 10 mo, less than 1% ang holdings niya in the fund. Diba? So diversified siya. Same goes with the Asian Bond Fund. Okay? It has bonds issued by the biggest electric utility company in the world, yung State Grid, overseas investments in China, and one of the major telco companies in Indonesia. Okay? Tapos sa mga stocks naman, yung up to 20%. Oh, I don't need to explain the companies because these are your popular guys. Microsoft, Alphabet, Facebook, kasi lahat yan nabibigay naman ng dividendo. And to ask, okay, are you paying out? You did not guarantee, but we deliver. Since we launched the fund, okay, both the peso and dollar, we continue to pay out even in the pandemic and until June 30, 2021. Pag meron kayong single pay na prospect, okay, make sure and they're interested in this fund, make sure to have the policy issued on or before September 29, 2021. Or in the fourth quarter, kung target nyo naman, on or before December 28, 2021. Here's the performance, okay? Compared sa mga typical bond funds, si cash flow fund, the dollar, has a little loss compared sa mga bonds na 3% ang bagsak, okay? And our peso, CFF, performed better pa. So in fact, highest value niya noong June 30, 2021. So this year, it recorded its best performance, highest NAV reach. Okay? And finally, the Global Market Navigator Fund. How do we position this? Okay? GMN is a multi-asset fund. Ano ibig sabihin nun? Hindi lang siya, kasi pag one asset lang, single asset yon, bonds lang or stocks lang. Pag pinagsama-sama mo na more than 2 assets in one fund, we call it multi-asset fund. And what's the good thing about multi-asset fund? Diba kanina we've reviewed that economies move up and down. And there are assets that perform at their best in different economic conditions. Just imagine GMN has all of these assets in the fund, and they can use an asset to offset any losses kapag yung other assets are weak. Parang teamwork. Okay? So if you want to earn stocks or equity-like returns, yung gusto mo parang kumikita ka ng stocks pero less volatile, here's the answer. And this is global, by the way, not just in the Philippines. Okay? And the good thing about GMN, it's heavy on stocks, but it can invest in other assets. So para siyang halo-halo. In peso siya available, and imagine our clients can invest in global assets using the Philippine currency. it is also a way to diversify and responsive to market changes. To highlight where it is invested in the biggest US stocks, like these names, okay? Corporate bonds, like your CFF, okay? High-grade bonds or yung mga safer bonds issued by these big governments na maganda ang credit rating. And also bonds in the emerging markets na may na-back up ng strong economic growth potential. Okay. So what is the fund? Look, the fund actually recorded its highest NAV last August 2. So nag-perform siya very well. And since we launched this fund last September 2019, the growth was already 8.2%. Di ba nakakalito yung top 10 niya? Ito yung laman ng top 10. Okay, for your better appreciation. Apple, Alphabet, Procter & Gamble, Coca-Cola, Pepsi, a mix of stocks in the US, in Asia, in Korea, okay, in different sectors. So, ibig sabihin, okay, these are the drivers of the fund. Okay? And isa si GMN, okay, in fact, siya yung best performing on a year-to-date basis. So mas maganda kung nabili mo yan na mas nauna kasi yun, look at the performance. This is the latest. Year-to-date, siya yung best performing. Yung mga Asian funds natin and global emerging stocks in the dollar, they're also doing well. Si CFF, 2% up compared mo sa other bonds like negative siya. So yun yung nagper-perform at this point. So if your clients are pretty fearful, tell them that too much fear can be costly. Dapat sinasabi natin kay client na there are many things to look forward to. In fact, you have to invest because of the future and not the present. Okay? So, just to give you a guide, okay? Don't be biased in one single fund lang, okay? In one single asset lang. And as I will support what Wilkins earlier mentioned, make the most of your clients. Tell them that they have to be the most productive in our most productive years. Diba? Ito yung time na dapat nagpa-plan tayo. Kasi again, the value of planning is not just the aim to grow, but also on the consideration of your life stage, of your strategy, pero underneath is the insurance portion. Kasi bakit? Here's another thing to how to highlight insurance, okay? Insurance is not expensive because there are many variants depending on the goal of their client, depending on what you will position for them. But tell them the value of protect and invest strategy. Okay? Kasi importante na we know how to compare our products with the others. Tayo lang ang may insurance component. And what's the deal with having that as a main proposition? Okay? Lahat tayo we need to save. That's liquidity. We followed this very classic financial triangle. Okay? Save up for cash flow, lessen risk through insurance, and you grow through investing. Bakit? When the market's down, these two lose value. These three, I mean, they lose value. But these two remains with you mostly in the challenging times. But we are recovering. Make the most of the recovery through growing. And if your client is stuck in crypto, make that the cherry on top. Okay, baka naman nagki-crypto kayo, walang savings. Nagki-crypto kayo, walang insurance. So, give them that lesson. All right? And as I mentioned, okay, importante where and how your money will work for our clients is a strategy of saving up for stability, growing through investment, and protection because that gives a security portion. Okay? Kasi bihira yun na-appreciate ng ating client. And always remember, our product strategy, the protection part is an all-weather strategy. Kasi tatandaan nyo, kahit nasa best market condition ka, hindi mo napipigilan ang sickness, accident, disability, and death. you need that layer of all-weather financial protection through insurance. That's, I think, what we have to echo to them. And we're teaching them financial planning, not just to grow in good times, but more so stable, in our most challenging time. Yun kasi yung value ng products natin. So with that, I end my presentation, leaving you a note that recovery is about progression and not perfection. Thanks for listening, everyone. And please let us know if we did well by scanning the QR code and or click the link that I will share later on. Okay? Thank you, and back to you, sir.
Ayan. So, thank you so much po, Sir Mark. Ayun. So, sobrang
Alright.
busog na busog sa learnings talaga today. Kayo ba, team? Learnings
Yes.
day. Ayan.
Super.
So, siguro ako, partner,